Hey guys, this is Tyaga. So I plan to release some videos on price action or technical traders, what should learn and what should not do, what should do. So in this series, just I want to release first video on trading psychology. It's a part one of this series. And why I taken this psychology as a topic one is you may be using a different technique for trading. You may be using price action, you may use MACD, RSI, other technical indicators, and any patterns, whatever it is. So I personally use price action and then patterns. So anyway, patterns is a part of price action. So this is the specific thing I'll use. Somebody use support and resistance in the price action itself. So so whatever the trading system you follow, trading setup you do, the thing is that trading psychology is very important, and nobody will teach you. So you have to learn practically how this work. But the points what I'm saying, you can note it down whenever you are trading. You can implement this personally. When you do practice this, then only you can able to learn. I did like that only, even though I had few clues and I learned from some mentors. So I did not after I did not succeed completely. After continuous practice only it will come. That will come actually. So the point to note is, so this is the important lessons that you have to learn in the trading psychology. So we have to believe in our trading system. Whatever system you follow, we have to believe in the trading system. You should gain that belief based on your back testing. So price action cannot be did back testing. Any other technical can be RSI, whatever can be done back testing. But price action, I'm not sure we can do the back testing. I never heard of thing, and I believe it's not possible. Price action, most of as per me, price action is 80% accuracy. 80 to 90% accuracy is that depends on um, your experience, skills set, and what are the setup you are choosing. So that is depends on that. So I believe it is almost 80 to 90% this is accurate. So believe in you have to believe in your trading system, and you should practice and you should confirm. So if you confirm with small quantity, then you start believing the trading system. So that's it. So any other, I don't think other technical indicators, I never tried in technical indicators. Only sometimes I use RSI indicator in the combination to the price action. So that's it. So price action always work for me. So I believe in that my training system, and I practiced and executed, and I found to be successful. So you have to start believing your training system. That is very important. And second is very important. Second is that focus only on the controllables. So what is controllables? The controllables are only the stop loss and the position sizing. Other than this, none of the thing you cannot control in the trading. I can try to give none of the thing you can control. Only you can define your stop loss and you define your position sizing. And this is the controls. But next controllables is the entry. When you are entering, yeah. So that is, these three are the controllers, but none of other things are controllable. So you have to define your entry clearly when you have to enter. Decide your entry, not defining. Decide your entry and define your stop loss and define your position sizing. So the position size is dynamic. So based on your that will come in the experience only. So if you have 3-4 trade setup, so you'll be having different types of position sizing for different trade setup, and different um, position sizing for different time frames. So all those things we have to define, and you have to fix before the entry. You should have that method of trading, so that is a very important thing. So that will impact your that is a very clear psychology you should have, or else if you are changing your stop loss, keep on changing the position sizing, it will any small loss will impact you huge. If your position size is big, or if your entire money if you are using in one trade, then that will be a not good sign. if any one loss, you start disbelieving your trading system. So you should believe, if you want to believe, develop to believe your trading system, you should allocate the position size accordingly. In starting, you have to do with the less position sizing. When you build a confidence on your trading system, then you can able to increase the position sizing. This is the third one. And when you are doing it, is also very important. When you are doing a trading, you should not keep on watching your profit or how much you are in loss. You may be going near to your stop loss, or you may be in profit. So it will influence your psychology. If you watch your profit or loss instead of watching your stop loss, and instead of watching your trade, that will definitely impact your psychology. If you see, if you keep 0.5 or 1% or whatever, I believe I'm the price action trader. My stop loss are not based on the percentage or amount that I can fix. Mine is always rational. So above the trend line I will keep, or below the trend line keep the stop loss. When I'm doing a breakout trade, I'll always keep an stop loss, and that is the one candle supposed to open and close below the trend line where I took the breakout. This is one example I'm saying. So if you are using a different setup and different trading system, so accordingly you have to define your stop loss, and you should not watch your stop loss. You see, sometimes if your stop loss is something near to 980 rupees, and you are sometimes you may it is come near to 990, so your loss could be somewhere whatever your position size is. So you see that, and you be worrying about then, and you may square off, and immediately if you see on the next candle it will turn up and it will go up, and your target will be achieved. So, and even in the profit also, you can see if you're in a good amount of profit, you see you may lost that profit, so you will be worried about losing the profit, then it will be square off. So that's the reason it's very important that you have to focus on profit, and you should not focus on profit or losses. You should focus on the trade. What is the trade, how the trade setup, and what is the trade is going on, how the candles are forming, or what is whatever, however it is, how you what is the trade setup that you have to watch. That is the focus on trade. And then so always you have to exit when the stop loss hit, or if you put a trailing stop loss, you have to exit the trailing target. Our target is hit. So you should not keep on changing your stop loss. That will end up definitely in your big loss if you keep on changing the uh, stop loss. And that is one thing. Identify the setup which is giving high reward with less risk. So you have to identify that. Also again experience, you have to do multiple risk assessment. If you are doing price action, there are a lot of patterns, but you have to identify which patterns works for you, because somebody will easily select see, for me I use mostly trend lines, I use head and shoulder pattern, I use triangle patterns. These are my favorite patterns that work for me. So similarly you have to identify what patterns work for you, and you should act on that, which is not favorable pattern to you but that is favorable for others. They are very well in identifying and putting the trades on that. So you have to identify which is your trades. There are thousands of shares in the share market, so you have to identify patterns and you have to act accordingly. And in the last and the important thing is, enter only a setup is available. You should not see, sometimes you not be having a setups, sometimes you get setup, so you have to wait for the setups to create and then you have to enter. So it's not that there is no, it's not get like tempted to enter before the setup has formed. So you should always enter when the trade setup is available. That is very important thing. And one more thing to be added is that you should always you should not get always emotional trade. If you lose one trade, that is part and parcel of the game. That time that is not working, so immediately you should not take a next trade which is emotionally. Again you have to identify the setup. When the setup conforms, only you have to take the trade. That is the importance of checking the setup availability and taking the trade. So this is the key things in handling the psychology. Hope it's clear to you. See you in another video. Thank you guys.